Hello everyone, welcome to a discussion on preparation of profit and loss account and balance sheet of banking companies of Unit 4 Bank Accounts of Corporate Accounting Part 1 for BCom third semester. Dear students, during this session we will discuss about preparation of profit and loss account and balance sheet of banking companies with one example. So here is one problem given to prepare final accounts of banking companies. So they were asked us to prepare the final accounts by following the given trial balance of Ideal Bank Limited. Here the information given like cash in hand is given, cash with RBI is given, payment to and provision for employees, rent, taxes and lighting, directors fees, editors fees are given, balance with central bank is given, money at call and short notice, investment in government securities and premises are given. And likewise they were also given the debit items like furniture, bills discounted and purchased, cash credits, overdrafts and loans is given, income tax advance is given, then printing and stationery, postage and telegram, interest on deposits, depreciation on banks, property is also given. Then at the credit side, they are given the information about the share capital, reserve fund, deposits, opening balance of profit and loss account is given, interest and discount is given, commission and brokerage overdrafts are given, borrowings from Bank of India, and provision for income tax as well as rent is given. And along with this trial balance information, they were also provided the additional information. One is interest accrued on investment, then provision for bad debts is given, provision for rebate on bills discounted is also given, bills for collection given, acceptances and endorsements on behalf of customers is given. So dear students, based on this available information in the trial balance as well as in adjustments, now first of all we have to bifurcate the items as per the schedules. Actually there are 16 schedules, one provision for provisions and contingencies and contingent liabilities, and one more important item, that is bills for collection. Like this there are various schedules are there. First of all we have to bifurcate the given items as per their schedules. So now first of all the cash in hand is there. It is an item of schedule number 6. Cash with RBI is there, is also an item of schedule number 6. Payment to and provision for employees is given, is an item of operating expenses, that is schedule number 16. Rent, taxes and lighting is given. Directors fees, auditors fees, these all items are the operating expenses which are to be taken to schedule number 16. Then we have a balance with central bank. Balance with central bank is an item of schedule number 7, so it is taken to schedule number 7. Then money at call and short notice is also an item of schedule number 7. Investment in government securities is an investment itself, so taken to schedule number 8. Premises is a fixed asset, taken to schedule number 10. Likewise we have furniture is also a fixed asset, taken to schedule number 10. Bills discounted and purchased is an advance, taken to schedule number 9. Cash credits, overdrafts and loans is an item of schedule number 9. Income tax advance is adjusted to the provisions and other liabilities and provisions. Then printing and stationery is operating expenses. Postage and telegram is also operating expenses. These two items are taken to schedule number 16. Interest on deposit is a interest earned. It is interest expended by the bank on the savings bank deposits, current deposits, fixed deposit, like that. So it is taken to schedule number 15. The depreciation on banks property is a operating expenses. Likewise we have the credit items like the share capital is an item of schedule number 1. Reserve fund is taken to reserve and surplus share, that is schedule number 2. Deposits is an item of schedule number 3. Opening balance of profit and loss account is taken to schedule number 2. Interest and discount is interest earned, so taken to schedule number 13. Commission and brokerage is an item of schedule number 14 because this is other income. Overdrafts is adjusted to the deposits, that is usually current account holder had the facility of overdrafts, so this overdraft is adjusted to the deposits. Then borrowings from bank account, Bank of India, so it's a borrowing clearly given, so it's taken to schedule number 4. Provision for income tax is taken to schedule number 5. Then rent is an item of operating expenses, taken to schedule number 16. So in this way we have bifurcated the items of trial balance, and like that we have also to bifurcate the adjustment items also. So as far as the trial balance is concerned, every item is adjusted once either in profit and loss account of the bank or the balance sheet of the banking company. But the adjustments item are to be adjusted twice, once in profit and loss account, and the second time again it is to be adjusted in the balance sheet. So let me discuss how these items of adjustments are to be adjusted in the respective accounts. Here, first of all, interest accrued on investment. Interest accrued is nothing but an outstanding income on investment. So first of all, it is as it is an outstanding income, it is an asset, so taken to other asset, that is schedule number 11, and then it is an other income, so taken to schedule number 14. Then the second adjustment, that is provide rupees 6,000 for bad debts. It is a provision for bad debts. So provision for bad debt, first of all, it is adjusted to schedule number 9, that is cash credits, loans and advances, like that items will be there. So from that, this is to be adjusted. Then it is taken to, as it is a provision, so it is taken to provisions and contingencies. Then after that, we have one more important adjustment, that is provide for rebate on bills discounted. So as it is a provision, first of all it is taken to other liabilities and provisions under schedule number 5, then it is taken to provisions and contingencies. Then after that, bills for collection amounted to rupees 80,000, so it is separately taken to the balance sheet, that is not to be included in any item of liabilities or assets. It is taken separately under the head assets. So asset ಆದಮೇಲೆ ಇದನ್ನು ತಗೊಳ್ಬೇಕಾಗುತ್ತೆ, ಟೋಟಲ್ದಲ್ಲಿ ಇದನ್ನು ಇನ್ವಾಲ್ವ್ ಮಾಡ್ಕೊ ಹಾಕಿಲ್ಲ. Then we have one more item, that is acceptances and endorsements on behalf of customers. So it is a contingent liability item. So number D and E, these are effected only once. So these items are not taken to the totals of assets and liabilities as well as to the profit and loss account. So these items are taken separately. Then based on these bifurcation of items of trial balance as well as the adjustments, now first of all go for preparation of schedules to balance sheet as well as profit and loss account. So first of all, schedule number 1 is for share capital. It is given in the trial balance. At the credit side, they were given 40,000 shares of rupees 10 each, 4 lakh amount is given. Then after that, we have to go for preparation of schedule number 2 for reserve and surplus. So dear students, you must be careful regarding the schedule number 2, because very much care should be taken while preparing this schedule, because without preparing the profit and loss account, it is highly impossible to complete the schedule number 2. So first of all, only one item from this trial balance is taken here, that is reserve fund opening balance, that is given 1,20,000. Then actually we have to take if there is any other reserves, but in this problem they were not given any other reserve, only one reserve is given, that is reserve fund, and we have treated it as a statutory reserve. And to this statutory reserve we have to add a transfer from profit of current year, but current year profit is still not known to us. So after completing the preparation of profit and loss account, then only we come to know how much will be the profit. So at this stage it is not possible to complete this schedule, and even balance of profit is also available only after completing the profit and loss account. So now let me go for skipping this schedule number 2 and let me go for schedule number 3, that is deposits. As far as deposits are concerned, in the problem they were given 2 important items, one is deposits and another is overdraft. So deposit and overdraft, actually overdraft will be given to the customers of current account. It's a facility given to the current account holders. So this overdraft is added to the deposits. Then only 2 items are available for deposits. Now let us go for borrowings. Borrowings is having only one item, that is borrowing from Bank of India. So that is rupees 44,000. Then after that we have to go for schedule number 5, other liabilities and provisions. Here, as far as trial balance is concerned, only two items are given. One is provision for income tax is given in the trial balance, and advance income tax is given. Provision for income tax is given rupees 16,000, while advance income tax is rupees 10,000. If advance income tax is more than provision for income tax, then these 2 items are to be taken to the asset side, that is other assets. But here provision for income tax is more than advance income tax, so it is adjusted in other liabilities and provisions. So the difference is rupees 6,000 taken to the outer column. And as far as rebate on bills discounted is concerned, it is a adjustment item. So it is taken once in the other liabilities and provisions and another in the provisions and contingencies. So now let me go for schedule number 6, cash and balance with Reserve Bank of India. In the problem they were given two important items. One is cash in hand is given, as well as cash with RBI is also given. Then the total is rupees 40,000. As far as schedule number 7 is concerned, balance with other banks, here money at call and short notice are given in the trial balance, as well as balance with central bank is given. These two items are to be taken to the schedule number 7. Then after that we have to go for investment. Investment in government securities is given. Only one item of investment is there in the trial balance. Then advances are having two important items in the trial balance. One is bills discounted and purchased, and another is cash credit and overdraft. Bills discounted and purchased are rupees 6 lakh, while cash credit and overdraft is amounted to rupees 15 lakh 36,000. And from these two advances we have to make adjustment. There is one important adjustment, provision for bad debts rupees 6,000. So that is to be deducted from the advances, and the balance is taken to the schedule number 9 under balance sheet of banking company. Then we have to go for schedule number 10 for fixed asset. There is a premises of rupees 72,000 and furniture of rupees 14,000. Only two fixed assets are there. There were no any depreciation, so the balance is rupees 86,000. Then after that we have to go for other assets. That is schedule number 11. Only one item is available for this, that is from the adjustment, that is interest accrued on investment. There is outstanding interest on investment amounted to rupees 28,000. Then we have to go for the contingent liabilities. Only one item of contingent liabilities is available, that is in the adjustment, acceptances and endorsements. And now we have to go for the profit and loss account related schedules. There is schedule number 13 for interest and interest earned. So only one item is available in the trial balance, that is interest and discount, rupees 2,50,000. And next schedule number 14, other income, we have three items. One is the rent is available, commission and brokerage is given in the problem, interest accrued on investment is also available in the trial balance, and the total of these is rupees 82,000. Then as far as schedule number 15 is concerned, there is a interest expended is given. Only one item, interest on deposit, is available, that is 64,000. And the most important item, that is schedule number 16, operating expenses. We have the items like payments to and provision for employees, rent and taxes, director's fees is given, auditor's fees, printing and stationery, postage and telegram, and depreciation. So these are the important items of the operating expenses which are available in the trial balance, and the total rupees 1,76,000. Then the last important note, that is regarding provisions and contingencies, we have two important items related to this. These two items are given in the adjustment. Rebate on bills discounted is rupees 6,000, provision for bad debts is rupees 6,000, and the total is 12,000. So based on these schedules, we have to prepare first of all profit and loss account. So at the top we have to write the name of the bank, and below that profit and loss account for the year ending 31st March 2020. First of all, we have to take the incomes. There are two incomes. One is interest earned and other is in other income, as per schedule number 13 and 14 respectively. So these are to be taken just from the what we have prepared, the schedules. So interest earned is rupees 2,50,000 and other income total is 82,000. These two items are to be taken here, rupees 3,32,000. Then we have to go for expenditure part. As far as the expenditures are concerned, we have three important items. One is interest expended, and another is operating expenses, and one more is provisions and contingencies. For this, we have to follow schedule number 15 and 16. Just look over this. Schedule number 15 has total 64,000, while operating expenses schedule number 16 is having 1,76,000 and provisions and contingencies rupees 12,000. So these three items are taken here. The total of these three items are 2,52,000. And then we have to go for the third part, that is net profit for the year, which can be found by subtracting part 2 expenditures from part 1 incomes, then we will get rupees 80,000 as the net profit for the year. So this is what 80,000 is essential for us, that is for preparing schedule number 2. So still we have not completed this schedule number 2. So after finishing this, we will go there. Then we have last year profit is balance brought forward, the profit brought forward from the last year is 50,000. Then total profit before appropriation will be 1,30,000. Then from this 1,30,000 profit, we have to make appropriations. So in the problem, they are not given any information regarding the appropriations. Even though if they are not given any information about the appropriations, it is mandatory for us or for all the banks to transfer at least 25% of the current year profit to statutory reserve. So the current year profit is rupees 80,000. On this 80,000, we have to transfer at 25% to statutory reserve, which will be rupees 20,000. And after transferring this statutory reserve, we will get the balance of profit rupees 1,10,000. And this is what the balance of profit taken to the balance sheet. So dear students, before going to prepare the balance sheet of the banking company, first of all, let me complete the schedules to balance sheet. So we have completed all the schedules except schedule number 2, that is reserve and surplus. So here reserve and surplus, opening balance of reserve fund is rupees 1,20,000. Current year profit is 80,000, and from on this 80,000 we have to charge 25%, and that is transferred to the statutory reserve, which will be rupees 20,000. And then we have total reserve fund balance rupees 1,40,000. To this we have to add a balance of profit as per the prepared profit and loss account, which is rupees 1,10,000. The total of these is rupees 2,50,000 taken to balance sheet. So then now we have to go for preparing the balance sheet of Ideal Bank Limited. So at the top we have to write Ideal Bank Limited, then below that balance sheet. Now share capital, as per the format we have to take all the items. Share capital, schedule number 1, reserve and surplus, schedule number 3, deposits, schedule number 3, borrowings, schedule number 4, other liabilities and provisions, schedule number 5. The amounts are to be taken or extracted from just we have prepared schedules. From that schedules we have to take these amounts. The total of capital and liabilities here is 27,06,000. And likewise we have assets part. As far as assets are concerned, we have cash and balance with RBI, balances with other banks, money at call and short notice like that, investments, advances, fixed asset and other assets. So these are the amounts which are to be extracted from the respective schedules which are prepared prior to this balance sheet. Then the total assets here are 27,06,000, and after these things we have to take the contingent liabilities. The contingent liability available in this problem, in that too in the adjustment, is rupees 1 lakh. There is endorsement related acceptance and endorsement related contingent liabilities. Then bills for collection is rupees 80,000. So like this we have to prepare the profit and loss account and balance sheet of banking companies. So throughout this session we were discussed about preparation of profit and loss account and balance sheet of banking company. These are my references. Thank you.